Okay, shall I? All right, good evening, everyone. Thank you very much for joining in for today's session. My name is Maulik Shah, and I'm one of the co-founder and CEO of Almus Risk Consulting. With me, I have Jairam Krishnamurthy joining from US. So good morning, Jairamji, from
Hi.
US, Boston.
Good evening.
Jairam is also a co-founder and heads the advisory and the research vertical at Almus. For those of you who don't know us, Almus is in the business of forex, commodity, and interest rate risk management for the corporates by way of providing services through advisory, consulting, or outsourcing. And we take pride in saying that we are the pioneer in starting Almus, the outsourcing services way back in 2012. So let me first welcome each and every one of you on today's session. The session is about the latest RBI circular. And one thing which I can tell you that since the day circular is out, which is 11th of July evening, we have been flooded with queries on the circular, what it means, how will it really impact, and there are many questions. And we thought of having this session more as what we have collectively gathered as an information, as our understanding, and B, what could be the likely impact. So that's where we have this, and thanks to all of you, your responses has been amazing. I'm sure there are many more participants who are still joining in. We already have about 40 plus, and we are expecting many more. So let me set the session. I mean, how this today's session we intend to conduct. One is it will be in two parts. In the first part, I will cover the broad contours of the circular, which will have various features, and I will cover that up by way of a presentation. That will probably take about 20 odd minutes. And in the next session, which is what Jairam will cover, we will deliberate on what could be the impact in short term, medium term, and the long term. Now, one thing which I can tell you that at Almus, our aim, our commitment is for the financial sector development. And immediate comment that I can talk about, especially for this circular, it's been a significant move. I would say a bold move. We will look at various elements of this circular, what really it makes it so special. And as we progress through the session, we would definitely invite, I mean, there are experts in this room right now. We would definitely want even your inputs and your insights into this. So here is what I propose. As we go through the session, and I'm sure you may have some inputs to share or insights to contribute to, there is a Q&A box there. Please put it up, your comments or your questions into the Q&A box. And maybe at the end of first session, we will also probably take up questions. And if you want to speak up, raise your hands. We will, in the back end, our admin team will allow you to speak up. And then, you can put up your question through an audio. So these are the two ways in which you can do. Yes, Sachin has already raised the hands, and thanks for raising it and being the first one. But we will give you the opportunity as we progress through. But at the same time, any questions, any inputs, keep sharing it in your Q&A box, and we'll pick it up here and put it up to the entire room. So that's one basic instruction for the session. Session will be for about 45 minutes. I will cover about 20 odd minutes. Jairam will take through a moderated Q&A between me and Jairam, another 20-25 minutes, and we have kept about 15 minutes for an interactive session with all of you. So that's how the conduct of the session. Before I begin, Jairam, anything you want to comment? You want to give your opening remarks?
Yes. Yeah. Good evening, all. So I think this relaxation, or rather this regulatory guideline from RBI has come at a very important juncture for the markets, where we are seeing, quite a volatile atmosphere everywhere in all asset classes. And India has been very severely affected due to confluence of many negative factors. So this is one step for easing the similar situations for India, probably in the future, may not be so much in near term. And it also follows the earlier guidelines wherein RBI relaxed guidelines for remittances into India by NRI and FCNR, where you can offer higher interest rates, relaxation on the ECB. So it's a process by itself at RBI level where they keep using the crisis as an opportunity to bring in some regulations and easing of trade and other flows. So I look forward to this as a very progressive measure, which will have a lot of medium-term benefits for India.
All right, thank you, Jaram. So let's begin with the first, circular content, the highlights, the features, and let me just open up the presentation first. Hope everyone can see the presentation. So let's go through what are the key features. I mean, what this circular covers. Okay, and this circular, as you all know, it is about international trade settlement in rupee. So it has a three critical element. The first one, you will be allowed as an exporter or importer to invoice in rupee. Now that's the first key feature. The second feature that the circular talks about is an exchange rate between the currencies of the two trading countries may be market determined. We will talk about it. We will expand it slightly in a bigger picture in the subsequent discussion. And the third key element is the settlement. The settlement of trade transactions under this arrangement. Now, let's take a step back and look at the circular talks about invoicing being done in rupee both for exports and imports. Now, for export, it was always allowed. As an exporter, you can raise an invoice in rupee. The entire mechanism wasn't in place for import transactions. And how it was not in place, let me try and explain. If you are someone who is an exporter, and if you decide to raise invoice in rupees, you end up receiving the currency Indian rupee. So you are an exporter, domiciled in India, you receive rupee, rupee remains with you. You have all the rupee accounts, various accounts, and you can keep the rupee funds with you. And this is perfectly fine. Reverse the problem for an importer. If you are an importer and if you decide to use rupee as a currency, what ends up happening is that you are exporting, or rather you are importing goods, but sending the money, the home currency, the rupee, to your trading partner. And that trading partner may be in anywhere in the world. There are two problems that arises. That A, the trading partner, when they receive rupee from importer in India, what do? First, where do they keep the funds? And the second question, what do? In the backdrop of these questions, if you read through the circular, two major permission, I would say, which is given in the circular. A, the trading partner can open the Vasto account. Vasto account is they opening an account, a rupee account with an Indian bank. They can open the rupee account, they can hold the rupee. So importer in India sends a rupee to the trading partner through their bank, and a Vasto account can hold the rupee balance. Number one. And the second feature, which is what circular permits, that the trading partner can invest those rupee funds back into the rupee assets. And there are certain permissible category, like for example, Indian GSEC, Indian Treasury bills. So this circular is very, very important from an import side, wherein this mechanism wasn't in place earlier. Now, there are instances, for example, during the Iran sanction time, where the US had sanctioned the Iranian oil to come in the market, India and Iran entered into a similar payment mechanism, wherein UCO Bank was allowed to hold the special Vasto account, and we could transact between Iran and India through a rupee mechanism. So which means that we paid for our oil imports. At the same time, Iran was paying and using these funds to use and pay for the food and other articles. So this mechanism was already tested. It was already there. However, it was purely bilateral. The key feature of this circular is it is not bilateral. Though one may say, and that's another background to the whole circular, that the entire discussion started because Russia was banned from exporting goods or rather trading in the world market, and India continued to purchase from Russia. How do we settle our trade transactions? Though the trigger can be a Russia purchase or India purchasing oil and other commodities from Russia. However, the circular is not bilateral. Circular is multilateral, which means circular today allows any countries, and of course there are exceptions, FATF countries, but otherwise any countries can open the Vasto, the Rupee account with Indian bank through the AD route. They can approach RBI and get the permission. Now this is very, very significant because then it opens up the Rupee trade transactions to the whole world. Now let's look at how this really is significant, and I want to sort of touch upon few data points, and we will examine together as to why this circular is so significant. I mean, in terms of its far-reaching implications. Today, last year data, say FY 21-22, we imported about $10 billion from Russia, and we exported close to about $5 to $6 billion. So net, there is a deficit of $4 billion. Now this $4 billion translates to about 35,000 crore rupee was a surplus that Russia had over India. Now the question, and which is what the question last 3-4 months, Ministry, RBI has been deliberating as to where to keep these funds and where is the mechanism where this 35,000 crore surplus in a year that Russia generates, what does Russia do with this entire funds? Which is where you look at it in this context as to now the entire 35,000 or 40,000 crore basket of rupee funds which are available to Russia can actually come back to India by way of investment in GSEC and treasury bills. Now, this amount is only going to grow. Let me give you another data points. The recent, in fact, today we have seen this data points in the 2 months, which is April and May, imports from Russia has gone up. So almost against $10 billion of the entire year imports. In the first 2 months, we have already imported about $5 billion. Expanded to annualized number, you are getting number of about $25-35 billion. Net of exports, we still have about $20 billion. Now let's look at what really happens to this entire $20 billion basket. Two things. Consider that this entire payment mechanism is in place. Consider the trading country called Russia is accepting the rupee from India, and they in turn invest it back to India or Indian rupee assets. We are talking about the trade deficit of close to $20 billion straight away being denominated now not in dollars but in rupee. And at the same time, you already have attracted about $20 billion of capital flows by way of Russian investing into Indian rupee assets. Now that's a big thing. Now this is just with one trade partner. Now the moment you talk about shift of a currency, a trade currency from dollars to rupees, let us also spend a couple of minutes and understand how the entire mechanism of trade deficit, dollar deficit, and then equivalent reserves, how the entire calculation works. Today we are about $600 billion imports in a year, plus $600 billion plus. And therefore you will always find a reference of these numbers when you look at the adequacy of the forex reserves. We are at about $600 billion plus minus, so 580 plus the forward positions. Now you will always look at, there can be a demand from importers, and therefore as a country, as a central bank, I need to always have that much of a reserves with me in case of emergency. Imagine what happens to this rupee funding. Today, when I'm importing any product from anywhere in the world, be it from China, Russia, or any other country, it is in dollars. And therefore, deficit is also in dollars. And therefore, even the reserves, the FX reserves, which is required for a cushion, will also be in dollars initially. But imagine if I shift it to rupee. Consider this $10-20 billion with Russia shifts to rupee. The requirement of keeping dollars, because now it is between rupee and Russia. Interestingly, the circular also provides that exchange mechanism. In fact, if you look at the same chart that is highlighted, or rather the same slides, it says exchange of messages in a safe, secure, and efficient way may be agreed mutually between the banks of partner countries. So between the two countries, they can decide, I mean, in a way, not in so many words, but in a way you can actually bypass SWIFT. Now, which means that you have in one stroke have converted your dollar billing into rupee billing. Not just that, you have also ensured a flow of capital back to your country. So it's a rupee flow, rupee deficit, financing through a capital flows which are in rupees. Now, naturally, it would mean the currency risk gets passed on to the counterparty, then the Indian importer is managing it. However, from a deficit point of view and the financing point of view, the pressure on the dollar is off. And this is immediate. We are not talking about far-fetched. So that's one clear thing that I can see here. And as and when the more trade partners adapts to this mechanism, obviously we are looking at a different market scenario. Now, does it mean that it happens immediately? Probably answer is no, because all of us know, all of us as a market participants, we know very clearly that trade currency, rather the dollar as a trade currency is very, very dominant, not just dominant. Over a period of time, it has actually given a very strong, liquid, transparent system, the most efficient system. I would say roughly around 60% of the world forex reserves are in dollars, but when it comes to trade, it is 80% plus. Now, which clearly shows the significance, and not just that, even for a cross currency trade, when you have a single currency like dollars as a reference, it immediately makes the market much more efficient and transparent. So that's why you will see dollar, rupee, or any other currency bid offer spread, the liquidity is amply available. The moment we shift to this route, we may end up having many more regional currency. For all you and me know, over a period of time, we may even look at a scenario of 80% share of dollars may come down to 50, 60 and will be replaced by bilateral currency transactions, which may not be very liquid. Now, clearly, we are heading towards maybe, as I would call it, an inefficient market. Why inefficient? Because that may not be that liquid as what dollar is today. Even for that matter, while the circular may say that it will be market determined, the practically rupee ruble, there is no direct exchange rate. It will always be through dollars. So no matter you may have a trade countries arrangement through settlement in currency, but when it comes to determining the market exchange rate, you will always go back to dollars. So this will happen over a period of time, but clearly we are looking at maybe a fragmented market in times to come with more and more adoption of this new way of trade settlement. That's one likely impact. Of course, on the impact we'll hear more from Jairam. The second, why it may not so happen immediately, again, it's a function of willingness and ability both. While what RBI has done today is enable the structure. It has provided those permissions to hold the rupee account, to hold the rupee assets. But where is the willingness? Maybe but for Russia, and that again is through a compulsion. Why would anyone or a counterparty want to trade in your currency? So that willingness will definitely become significant. It will play a significant role in time to come, because today rupee is not internationalized. Rupee is not a globally traded currency. It is still confined within the geography. So even if, let's say, you have created the structure, but for sure it may not really result into an immediate shift. So only to that extent where it is more out of compulsion, and Russia is a case in point, the rest of it may still take time. So we don't really expect this to happen overnight. At the same time, for some of it, and it could be a 10, 20, $30 billion, even if that move happens, at this point, it is clearly helping the currency which is under pressure, and it also ensures that you have a capital flows. So these are the two clear things that one can read from the circular. Let's also look at some other technicalities. We have been used to hearing the Nostro. What is Nostro and what is Vasto? Again, a very simple thing. The definition comes from the Latin where the nostro means ours, vostro means yours. So SBI, so today any Indian banks opening, let's say a Rupee account of a foreign bank. Here I've given an example of a Chase Bank, New York. That will be a Vasto account, whereas SBI's account in Chase Bank, New York for a dollar transactions is a Nostro account. So that's a simple definition. So Indian banks opening an account outside, which has been the case so far, a dollar account is a Nostro account, whereas the reverse of that is Vostro. What it takes to really get started with this entire arrangement is very simple. As long as you have a willing trade partner, the willing trade partner bank applies to the AD bank in India, and through them they go to the RBI. RBI will give them a clearance, and it is a procedural matter, and they can start transactions. So that's really the arrangement. As I mentioned earlier, it was already there. I mean, as an exporter, you could have received, but not for a importer. So these are all couple of things that is really sort of, I would say, a kind of path breaking as far as the Indian financial market is concerned. We covered about the exchange rate mechanism, how to get started. Now look at it, and this is again, I'll just probably, this is the last piece before I hand it over to Jaram with a few pointers. But now look at it like this. Today in India, we are already seeing a huge amount of fintech innovations. Combine that with the trade settlement mechanism where you are actually crossing your borders. Now, today, as we speak, frankly, we have no idea what could be possible out of this kind of a the permission, the reforms which RBI has been constantly looking at. And personally, my view there is looking at the growth momentum in the country, looking at India already becoming kind of looked upon place for many other innovations and all. The last piece, which is all about the willingness of the trade parties to really hold the rupee and invest into the rupee assets, probably could be also something which may not be at a far off distance. And if that really happens, then as we all know, and all the market participants along with me would have heard this at least once in their lifetime, that dollar always talks about dollar. It is my problem, and I mean my currency, your problem. For all more and more adoption of rupee trade settlement. At some stage, even we may be able to say that. But whether we see those days or not, but for sure we are in an interesting times. Very clearly for two reasons: whether you are an exporter or whether you are an importer. The moment you shift the currency, clearly you are shifting the risk or the epicenter of the risk from India to outside India. And let me connect this to another point called NDF market. I mean, in our Almus annual conferences, this has been most talked about subject, the liquid NDF market. We in fact had one entire year, or rather one annual conference focused on the NDF market, wherein it is becoming much more liquid. Now imagine more and more risk being shifted to the outside country. Naturally, the demand for risk management, the demand for trading in the currency, the rupee currency, will become much more prevalent there. And we already started receiving queries from some of our clients who wants to know that, how do you then negotiate with the vendor? So far vendor has been quoting in dollars, and be it an importer or exporter, it has always been traded in dollars. But imagine what happens when you shift to rupee. Today, you are managing the risk and you have your own cushion when you're quoting, let's say, for an export price. The prevailing price is 79.80, I mean 79 or 79.80, big figure. You will always keep some cushion of 1 or 2 rupee and say, okay, look, if it is 78, then let me price accordingly and put it in the dollars. But tomorrow, if you have to price in rupees, what will you do? Will you keep that cushion? Will you add up that margin? Because the other party is equally smart enough. He may want to know, if I'm going to hedge the risk, I may want to keep some cushion. So it really opens up multiple opportunity. At the same time, it also opens up number of negotiations, or I would say the possible ways in which you can trade. A very interesting time ahead. But let me sort of take a pause here. There are many things that probably I can talk about, but I can see the time and it's 5:24. So I would rather take a pause here. As I take a pause and shift to Jairam, who will then take up the piece on impact on the trade. Let me just look at, there are some Q&As that I can see, and let me just quickly glance through that, and then I will shift to Jairam. So, okay, so here is a question from Narang. Can GOI be trusted for maintaining continuity of policy? I think government has been really credible. I mean, in terms of establishing the credibility in the international marketplace, for sure, it is actually a proven case. And I was talking to someone just this morning that this kind of a circular is like a nuclear weapon testing. If nothing happens in the next, let's say, 1 week, 10 days from US, consider diplomacy at its best and the credibility at its peak. Because you have set up a payment mechanism, not just bilateral. So it is a multilateral. And for sure, you are bypassing SWIFT. And in case if there are no other retaliation from US, it demonstrates, in fact, rather the circular announcement itself, I would say demonstrates the confidence and the courage of the government to announce this. That's how, so that reflects in a way of credibility. So continuity of policy, thanks for asking that question, Narang. And will shipping companies accept freight in Indian rupee? Again, as I said, this is more of bilateral. So I don't expect that we will shift to rupee overnight. But at the same time, will the willingness be created? Maybe answer is yes. And just to talk about the willingness, see, but for what US did to Russia for sanctioning the dollars or banning Russia from using the forex reserves when it required the most, probably we would not have seen this shift. So here you have a case where the central bank world over may start thinking that, am I really safe enough? And you can now compare the trade-off. Earlier, it was probably an efficiency. Like I said, dollar is a liquid currency, being very efficient. Now we are moving towards inefficiency. And when I say we are moving towards inefficiency, when you have a regional currency takeover, for sure this will happen. And at the same time, you will have an arbitrage, especially when there is an inefficiency. But what is really governing today the most, and that is safety. So here is a case or other trade-off of safety over the efficiency. So more and more safety over efficiency, you will have more willing partners. Today it could be Russia out of compulsion, tomorrow it could be any other countries who is okay or willing to participate. So that's a take on willingness. Are investments made in Indian assets will be safe for the foreign assets and issues of liquidity? For sure, that's a very valid and important concern which any foreign investors will have. And I think that's what we will see probably in time to come with more and more foreign investors. So today also we have a foreign investors, but here you are clearly saying that, look, trade with me in rupees and plow back those money back into the country in the Indian GSEC and Indian T-bills. And that's really probably a test of, is there an acceptability? And that's really the step towards internationalization, because me and you can talk about internationalization of a currency unless there is a willing buyer and a seller, unless there is a willing investor. These are all just a pipe dream. So it's really on the test, I would say. The last question that I can see, not the last, I think there are many more. Let me quickly take up. And Jaram, just hold it for, I have many questions for you, but I'm just reading through some of the questions. What shall be the impact of the SU clearing? Does the SU banks can work on INR, or it needs to continue in SUD as always? Thank you. Jaram, I will have this question for you. You can think about an appropriate answer. In case if you think this is something that you can address. At this point of time, is not the Reliance or Adani's maybe the biggest beneficiary of this arrangement, a tailor-made arrangement for them. But I wouldn't look at it this way. There are many, many industries. One is clearly the oil. The other is I think there are also the fertilizers import, the coal imports, even the diamond imports. So there are industries which has imports from Russia. And I'm saying this is again, while it may be in the backdrop of Russia, but it is not a Russia-centric circular. You will have many more trading partners willing to adapt to this. That's what I responded already. Retaliation from USA, keeping the fingers crossed. Willing trade partner means in case of importer, the seller and his bank should be willing to settle in rupees. Yes. So your counterpart who's who's supplying to you, your exporter. So you're importing from an exporting trading partner, they and their bank. So bank will definitely be willing if the partner is willing. So that's one. So there are many more. In the meantime, I will take up those questions because I will just read through that. In the meantime, I want to patch in Jairam. Jairam ji, so again, once again, thank you from joining from USA. I'm going to put questions straight to you. There are a couple of questions that is running in my mind. While I covered some of it on the dollar dominance and all, you are a financial market man. From a financial market perspective, how do you see this shaping up? I mean, will the dollar dominance on the international trade is under attack? And your response?
Yes, Malik. I think this is a very important point to consider. In fact, subsequent to the Russia-Ukraine war, which is still ongoing, of course, the economic sanctions imposed on Russia, and many countries are moving towards settlement of trades bilaterally, like China, Russia. I think the volumes have increased quite a bit between them. And Saudi Arabia has also been settling in yuan for some of their imports from Russia. So this is a process which the world is moving towards as a multilateral currency settlement, avoiding usage of dollars, except where US is not one of the parties to the trade. Like you mentioned earlier, while the US has just around 10% of the global trade in which it is an exporter or an importer. The invoicing in dollars is to the extent of 80%. And that percentage will definitely come down as more and more countries move towards this. Now, what happens is, if like during the Russian-Ukraine war, there was a ban on Russia using the SWIFT, Russia accessing their dollar funds, etc. So they had to have a settlement in the ruble. And now, instead of ruble, you can also have a settlement in INR. Now, similar thing may happen to some other country for whatever reason. There maybe that country is not doing something which US does not like, but the US does not want that country to deal with another country whom US has a issue with. So to circumvent these things, more and more countries, at least where the dollar, where USA is not a trading partner on import or export side, they may tend to move towards settlement in their own currency. And that is what even India has envisaged by issuing this regulatory clarity. So like you said, there was always no bar on India invoicing in rupees and getting settlement in rupee, but definitely this circular has opened up the regulatory clarity to everyone, every interested party. So it is, I would think of this as part of the structural change in the global trade scenario. Again, when I am not expected to settle in dollars for my trade with Russia or with any other country who is accepting rupee for settlement, to that extent, I don't need to maintain the dollar balances at USA. So that naturally the demand for dollars is likely to come down. So that this process becomes entrenched, and we will see the dollar dominance decrease over a period, and the buildup of dollar reserves also may reduce. Let me repeat also that this has no immediate impact, but there is one other factor that we need to consider when we are talking about dollar dominance, because apart from trade, dollar is the dominant currency as far as the credit market is concerned, and that dominance will definitely continue. So it's going to be very long drawn process. Again, let us also remember that wars have always been turning point for the markets and the economies, global economies, historically, and post World War post-World War, UK lost its dominance, and possibly this Russia-Ukraine war is some sort of turning point for the way global trade is conducted. And we are now become a part of this change in process with the issues of this settlement.
So Jairam, you mentioned about the dollar demand being reduced eventually, if not immediately. Now, the question there is, as I can see, there are two components of dollar demand. So today, as an Indian importer billing in dollars or buying in dollars, I may want to keep a cushion in terms of the dollar reserves. At the same time, let's say I'm buying from China. So I import commodity from China, send them the dollars from here, and even the Chinese supplier eventually will take dollars from me and invest back into the treasury, US treasury. So there is one demand which is originating from me by way of a cushion that I would create. And there is another dollar demand because China receives, which is China trade surplus, and eventually they invest back into, say, US. Now, with this kind of a shift, we are talking about two demand being impacted and attacked in one go. Now, if this were to happen, I mean, what do you see, like dollar demand being impacted so much? Are you now seeing a kind of, the doomsday for dollar?
Well, as I said earlier, the importance of the dollar is going to definitely reduce. Because if you look at the recent problems also in the currency market and the global economic scenario, many of the indebted countries, for example, near closest that we can see is Sri Lanka. And the indebted countries are unable to meet their obligations. There have been defaults. Even Russia has defaulted, and so these are things that can, be addressed or rather come down if the dependence on the dollar is reduced. But as I said earlier, it's not just the trade which is determining the dollar dominance of the credit market. Most of the global financing is through the euro dollar futures. So why will we call the euro dollar futures is actually the dollar financing that is being handled there. And so until that sustains, dollar will continue. But let me also point out that recently China also came out with some provisions for giving swap facility to some of their trading partners. So this is something that, new development. It's possible that going forward, people who trade with China, and if China can develop a liquid market for their currency and also their instruments of investments, possible that, this even credit market can slowly shift to other than dollar, and that is how the dollar demand dominance and the demand for dollars can come over a period. But yes, this is a very long process. Don't expect anything dramatic overnight, and it's going to be over a period of some years.
So are you seeing a similar move? And again, this is a hypothetical question, but are you seeing a similar move from other regional players?
I think it will, in some way or the other, it will happen. And the most players who may resort to this will be who are dependent on, who have a trade negative balance, and who would rather be, in a position of not depending too much on dollar and manage the risk, the macro risk for their countries. But again, it's easier for me to float a circular around and say, no, I will manage my risk easily, and also I don't have demand for dollars. But the crux of the thing is acceptance of the rupee or any other currency where the country is. So this acceptance is going to take some time. And let me point out, historically, rupee has been a depreciating currency. And even in the last 5 years, like in 2018, we were at 63, and now we are at 80. And it's about, around 30% move. And over the period, the global investors and even the trading community has seen this happen. And to create confidence in the currency that, it will not depreciate so steadily always, it takes some time. And a lot of macro stability factors have to be put in place. Definitely.
You have been following NDF market very closely in your entire career. I mean, I'm sure earlier as a trader, you have been trading the arbitrage as well. How do you see that market shaping up? Because here you're shifting again, as I mentioned earlier, the epicenter of risk moving away from India to outside.
Yeah.
And for an outside, and there is a question related to that as well about the hedging process. How do they hedge? And do they go to then Singapore, Dubai, London, dollar rupee market? How will that market shape up?
Yeah, definitely the demand for rupee will increase eventually when this intention of the circular is realized, and more and more exporters of exporting countries decide to have rupees, So let us assume that, let us assume the opposite of the situation now we are having, and rupees in a strengthening phase. And we have the carry and other things play in favor of the rupee and India's growth picture, etc. So at that time, there may be need for the global trading partners to hedge themselves against the rupee's strength if they are exporting to us. And I think these types of changes, in any case, if I am avoiding the risk is shifting to somebody else.
Yeah.
So that guy has to cover his risk. Now today, who knows? Most of the US exports and imports are all priced in the dollars, and they don't have a risk to manage as far as the global trade is concerned, excepting for their MNCs who are situated abroad, who have to repatriate, etc. So they have no conversion problem. But if the moment you, let's say, have an arrangement, is a very utopian situation. If you have an US exporter accepting rupee, he will have to manage the rupee risk as well. So that is a kind of thing. So the risk will not go away overall from the market. Instead of me managing, someone will have to manage the risk. Definitely. Yeah. So India's market will remain as, because you also don't forget about the investors, the NDF market is not just about the trading community. It's also the investors, hedge funds and pension funds who have money to invest in India. Sometimes they also go into the NDF market to hedge themselves. Then there is this FDIs. FDIs could be coming from anywhere, from US itself. So they will have to hedge. So NDF market will not lose its importance to some extent. Yes.
So they also say that, as a buyer, you always have a negotiating power. Right. So here we are talking about imports. So don't you see the possibility that as an importer, I can always at least demand, and I don't know how practical it will be, barring the latest one, which may shift immediately. And I'm talking about oil and, those Russia trades. But even otherwise, don't you see, I mean, I can understand as an exporter, if I have to invoice in rupees, I may have to convince the other party. But as an importer, I can always demand that, look, I'm going to buy, and if I will buy only if I am billed in rupees. Do you see that negotiating power as a buyer will influence and expedite the whole process?
Yes, it can, definitely. I think, so if you're talking of, let us say, an European corporate importing something from India, that's what you mean.
No, so India importing from them.
India importing from them.
That's what I will have my cloud as a buyer.
Yeah, definitely. And that will be there. Again, as I said, right now, the dominance of dollar and other currencies, major currencies, is much more compared to the INR. And the weakness of the structural weakness of India, like constant external negative balances and the depreciation pressures, etc. So even now, the overseas exporters follow our currency movement and also the forward premium, etc., very closely, and we are not able to, even some of the exporters not able to get the best out of the forward rate for INR, depending on what you are exporting. Particularly if you have more competition from other countries, and this will be a thing that we will have to manage. Therefore, yes, they will have some upper hand until it becomes more widely used. The foreign exporters will have some, more negotiating power.
There is one very controversial, or rather an interesting question. I don't know whether I have the answers. I'm putting it to you, and maybe none of us may have the answers. If China keeps rupee funds in Vasto account and buy Indian asset, would not China will be a dominant investor in India? Will GOI not react or retaliate?
Yeah, I mean, it's not an easy question to answer, but I think looking at the previous instances of reactions for the Chinese investment into India, etc., I think this may require, see, whenever they have already said that when you're opening an OSTO account, you have to take a permission from RBI. So when you go for opening a OSTO account for a Chinese bank in India, there will be so many considerations that it may not be routine stuff. It will have to be considered with the various options. So yes, we may get some guidelines as well in this regard, definitely.
Yeah. Well, Nikhil, what's the time frame you're looking at for such a shift? As I said, some of it will happen immediately, especially as the trade with Russia is concerned. I mean, as if, I would think that they have been waiting for this, the entire payment mechanism. But for others, it is a medium to long term, for the simple reason that you need a willing partner, willing trade partners who is willing to accept rupee, I would say. What will happen to the various incentive and promotions which are offered? Deepak, that's from you. What will happen to various incentive and promotions which are offered by the GIFT City in light of this new circular? So I really don't know, Deepak. In case if you want to further elaborate your questions, but I'm assuming that the entire circular is focused around the payment mechanism. So this is to facilitate the trade settlement. I don't think so it will have any impact whatsoever on other piece which is related with the incentives or the promotions. But of course, if I haven't understood the question, please feel free to add up. There was one.
Malik, I think there is a move to give a regulatory clarity, because there are some incentives which exporters enjoy, and regulatory clarity will be probably coming to confirm that they will continue to get these benefits even
so
the invoicing.
If you are exporting in rupees, it will continue.
Yes.
Okay. So if Deepak, that's what your point is, that today I'm exporting in dollars and getting the dollar in the country, and therefore there are some incentives. Whether that incentive will stop, if that is what the question is, probably, as Jairam says, no, because you continue to export. So you are getting the foreign savings into the country. So I don't think so that will have impact. But of course, more of it, once we have a circular clarifying that, probably we can reflect more on it. There is another question which I will admit that I don't have an answer. This used to happen through ACU. Why did this stop? Jairam, you have any idea about this?
So ACU, I think once again we will have to get a regulatory clarity on this. That is what I feel, because obviously, when you can shift the general whole world into a rupee settlement and rupee invoicing, even the ACU members should be allowed eventually. But since the circular does not speak about it, we'll have to seek a specific clarification in this regard. Definitely.
Okay. So I think there is some comparison here with Sri Lanka from Ganesh. Yes, the conditions there, I don't really know how far we can really compare the situation that we are in today in terms of our robust macro stabilities and various other factors to Sri Lanka. But yes, those concerns will always remain. Being in India, being Indian, we will probably always think from our side as an external foreign investor. So let me read the questions, and that will reflect whether I've really got him correctly. When it comes to Sri Lanka, it will go the other way around. Will Indian companies and banks be happy to hold reserves of INR in Sri Lanka? So, and I'm assuming that this is really drawing a parallel between the current Sri Lankan crisis and India. And I would only comment that, as far as the overall, the growth, the factors, the macro stability, today we are probably, far ahead, no comparable, no match. And therefore, I think it's all about India standing up to its credibility in the world market and saying, look, here is what the opportunity that I'm providing, a growth opportunity, a stability, and therefore I am a destination. And if that can happen in currency, which is probably a home currency, why not? Now, these are all far-fetched thoughts and ideas, but as I said, it's not going to happen immediately. Even if some foreign investors is interested in India, I think there is definitely a country risk and a currency risk, which is going to be on top of their list. So that's for the questions. Jairam, I can't leave you without asking this important questions on the impact on the financial market. Now, dollar index already at 109, dollar rupee at almost 80. While this circular may or may not have a direct impact on all of it, but definitely your view on the current market, where do you see? And as I'm asking these questions to Jairam, maybe I think it's also time for anyone who wants to sort of, share their inputs and insights. We have 10 more minutes. You can raise your hands. We will unmute you. We will, in the back end, we will allow you to speak up. You can either put your questions or even if you share your thoughts. I think that will be really useful for other participants. So yes, 3 participants already have raised, and we have Sachin, Yashwant, and Piyush. So we will give you time to speak, but Jairam, in the meantime, your response and the view.
Okay, first the global markets. So the two things have dominated the global financial markets here. One is the emergence of inflation, and secondly, the supply chain issues which have got aggravated after the Russia-Ukraine war. And in fact, the third factor is the European crisis, which has, which doesn't go away. It keeps coming back. And that's the reason why the dollar demand has substantially gone up. And while the US authorities delayed their reaction to the emergence of inflation by calling it transitory, but once they changed their tone, they have been moving much more swiftly compared to other major countries like the Japan. Japan, in fact, has not moved also, and Europe is still not raised their rate, and officially their rates are still in the negative. I think even Swiss authorities have moved much faster. But that itself shows the structural issue in Europe and the problems of the peripheral countries, etc., which they have to consider before making the financial conditions tighter. So that's resulting in the dollar remaining dominant, or rather having the demand from most of the countries, particularly the emerging market countries who have had some huge repatriations happen. And you look at the Japanese yen movement of almost 30% in the last 1 year, and that's a massive movement. And this is no doubt two things have played out. One, you have US authorities taking up the rates, and the Japan sticking to the easy policy. But one challenge I'm seeing in this trend continuing is that as Japan's currency moves lower and lower, and even euro, then I think more and more competitive depreciation of currencies is happening, and that is not something the major countries, particularly even US, is likely to encourage, or rather like, because their trade deficit per month is over 80 billion, and eventually that will come to haunt them. So I think it's somewhere we are in a region where we could give or take 3-4% here and there. We should be in the region where we should see some sort of retracement for the dollar downside. And particularly looking at the recessionary fears that are building up, I think US monetary policy itself is one of the most volatile policies I have seen over the years, and it doesn't take much time for them to come down from 3.5% to 2.5% or even 2%. And the moment they do it, I think you will see the dollar trend reversing quite fast. I mean, it may be six to 8 months down the line, possibly.
So you are expecting dollar to correct down, dollar index to correct down?
Yes.
And as far as dollar rupee, so we already saw an aggressive market intervention at 77. Post which in the last couple of weeks we have been seeing an intervention through a policy. If I were to remind myself of what happened in 2013, again series of announcements, first the intervention on the market, then the policy intervention, and then finally it was like a bomb by Raghuram Rajan. $34 billion got attracted. Do you see anything around this time? Already RBI has been attempting through policy intervention, already 2 circular out. What do you expect, A, from the RBI side, and B, from the market view perspective?
See, first the market view. I think there's a confluence of too many negative macro factors for India that has come into play in the last 1 year. And in the process, we have seen rupee depreciate. If you look at last July and now, we are about 10% lower as far as the rupee is concerned. 10% does not look big compared to many other currencies, even euro or yen or even other Asian currencies. But at the same time, we should consider that at the time of a recovery post-pandemic, Indian rupee did not appreciate to that extent. So to that extent, you can't say that rupee has depreciated too much. Now from here, where we have seen some moderation in the oil price. And if it sustains below 100, I think that is some relief for us. And then also we have the dollar index itself, as I mentioned, trading at a very crucial juncture, could be a turning point over next few months. And finally, the flows. Now, that is the key point as far as I'm concerned, because in all instances of global crisis in earlier, Fed put was available. What is Fed put is that Fed comes to the rescue of the markets and then he lowers the rate, he prints liquidity, but we are still in a US rate hiking path and they are even not even half the way through, and quantitative tightening has just started. So I think it's very difficult to expect a rescue act from the US. I think the only way the rupee possibly can have a meaningful correction is a return of flows from FDIs, or maybe if there is a large-scale intervention from Japan, let us say, because we have been talking about Japanese yen moving one way and not to their liking, or even Europe, because while they may not directly intervene, there could be some policy move. So I think Euro falling further also will be a hit on their face, because that speaks badly about their integration, etc. So I think there are possibilities that this trend can be reversed, not because of Fed put or something like that, but it is possibly because other countries managing their currency volatility and could impact the rupee also to the slightly upper side. I doubt even if we do see, technically we are in uncharted territory. If you look, it is like gold trading about $2,300. So we don't know where it will be next. So that way, but projections are that we might touch 80-70, one of the technical projections. And then if you look at the range in which we were trading between 72.5 and 77, if you project a similar range from 77, you could be around 81.5. These are the levels that I'm getting, but these are arbitrary. I can't say that these will definitely hold. If the situation worsens, we could see more weakness also. But we are at a point where there can be some correction, and I see a correction possibly to around 78.5 in the best case scenario, and possibly 1% around 79.20 in the minimum if there is something that is happening.
Okay, thanks, Jaram. I'm moving on to where we have Sachin. I'm allowing you to speak up. Please go ahead and put your thoughts, questions, or your inputs. You'll have to unmute and speak. Meantime, I can even have Piyush Mehta. You can unmute and speak.
Hi. First of all, congratulations for such an knowledgeable session. I have put my two questions. One is related to debt repayment obligation, and second is about ECB loans obligations of corporates. Please share your experience on the same. Thank you.
So, Piyush bhai, this debt obligation of $200 billion, so which is the headline that came in the paper a few days back. I think one simple one-liner answer to that is it is probably highly misplaced and most hyped about headline, I would say. And the reason I'm saying so is for various elements of it. $200 billion debt obligation due in 1 year has always been there. It is something which is new. In the same article, you go through all the 4 to 5 years, you will always find $225 to $50 billion due within 1 year. Now, let's understand what it is. It is a debt obligation for the country. It could be ECB, it could be corporate loan, which is coming up for due. The percentage of short-term debt obligation to the total debt, in fact, has come down. So what it was 4 to 5 years back versus what it is today, as a percentage, it has come down from 30% to almost 20-25%. So actually, it is a positive, not a negative. Number one. Number two, you don't know how much of that is hedged. So there are many guidelines. Even RBI has come out with guidelines. RBI also came up with unhedged foreign currency exposure quarterly statement. RBI has been asking that to keep a track of whether are we taking as a country, is it a systemic risk? So we don't know that information because that's not publicly available, but RBI does monitor it. So the point here is $225 billion standalone debt obligation line item or news item probably is out of context because that has come at the time when dollar rupee is already at 79 and 80, and it is just adding fuel to the kind of, the talk that is going on. I wouldn't really pay much attention. Maybe you can sort of ignore it for now. And corporates are nowadays smart enough. Even ECBs are hedged. There are ECBs which are mandatory required to be hedged. So all of that is in place. I don't really see much worry on that news item. What's your experience of ECB loan and hedging of interests thereof? In fact, one of the things that I also highlighted in my earlier introductory piece, Almus is an expert in ECB interest rate risk management, and we have been managing that for our clients. November, December, and in fact, I would say October to December was one period where we have been pushing clients to convert the floating rate to fixed rate. Now, at this stage, whether one would recommend, maybe answer is yes, because interest rate is in an upward trajectory. But at the same time, if you look at the projections for the next year, 2023 and 24, we are also talking about, in fact, the Fed member voting itself indicates maybe a pause or a reversal post June 2023. So at this level, yes, you can be very prudent, safe, and hedge your interest rate risk. Currency, I would suggest you need to manage dynamically, because if you're doing 100% hedge on a currency, then there's no point. In fact, at today's level, probably on a complete hedge basis, borrowing in rupee may be cheaper than borrowing in foreign currency. See, one is if you're borrowing in foreign currency, I'm assuming that you have an interest to kind of save some cost, but that will come at a risk. Manage the risk. There are opportunity to save cost. These are the two response. Let me see if I have any other member wanting to speak. Nothing. I'll just quickly go through the chat if I haven't really got your thanks, Piyush. Thank you. Bharti, you have one question. Welcome. Joining at the last moment is fine. Whatever you could get. Transactions as per circular entitled for foreign trade policy benefit. Answer is we just deliberated. Maybe yes, because export in currency other than dollars, let's say in rupee, does not really change the benefits. So I think one question also was there, and there could be some clarifications on that front. So as far as foreign trade policy is concerned, it is more linked with the export than a currency. I guess I have covered. Okay. Why euro is falling like a? So Yashwant had a question. Jairam, you want to respond to that? And by the way, we are fine. I mean, we can still continue as long as there are questions. We will respond to that. Jairam, you want to take up these questions? So what is the reason that euro is falling?
Can you just read out the question? I'm not able to.
Yeah, I'll read out for you. What is the reason that euro is falling like a pack of cards vis-a-vis INR, USD, etc.? So euro fall ke upar question.
Euro.
Yeah. Why euro is falling?
Okay, so I think euro falling, as I said earlier, the very, very slow response from ECB authorities for addressing the record high inflation. Europe inflation is as high as the US. US has already moved their policy rates 3 times, 25, 50, and then 75, and there is speculation that can be 1% more when they meet next week. But ECB is still not clear how much they will hike, and they are yet to move on their rates. That is, so definitely the differential between US and German bonds have been much in favor of dollar. So that is one. Secondly, Europe has been faced with a huge energy crisis, particularly the natural gas supplies from Russia have been stopped. There is talk that if the supply constraints continue, there will be rationing of natural gas for European, particularly in Germany, etc. It will impact their economic activity. So the point is, if you are not addressing inflation with enough policy measures, and also if you're having challenges for your economic activity, you are going to slip into a recession definitely. And the chances of deeper recession in Europe is much greater than in the US. So that is the reason why. And of course, we have always come, as usual, the European structural issues have already come into the fore. Once again, the peripheral country bonds have been falling much more, and the spread between German bonds and some of the Greece and Italian bonds have been widening a lot. So they are having a problem how the rate hikes will be transmitted. So these are the issues they're grappling with, and at least the US doesn't have any such problem. So it is a safe haven buying of the dollar, which is continuing, and avoiding European investment. This is the crux of the reason why you see euro falling, and you need some very strong policy measures from them for reversal of this trend. Otherwise, I see it keep going towards 0.95 or so.
Thank you very much, Jairam, and thank you indeed, all of you, for your response to this webinar that encourages us to do more and more of it. At Almus, we will keep coming out with this kind of a knowledge series. There could be some announcement. Definitely, we would like to come and share with all of you, and your participation like this will always encourage us to do more. So thank you all very much for your time and attention. Thank you, Jairam, very well from New York. Boston, and have a good day.
Thank
Good
you all the
evening,
participants.
everyone. See you. Bye-bye.
Thank you.